I see a lot of tech companies that existed before AI, and now they brand themselves as, oh, we're an AI native solution. What the F does that mean?
I think we're going to see $3 billion exits in construction tech in 2026.
For anyone who thinks that a socialistic society is ever viable, you're an idiot. Rich pay their fair share. Why don't you write down a number, and let's agree on what a fair share number is, and then let's compare against what it already is, and I guarantee we're already there.
Why does any individual on this planet, part of the society and part of mankind, need more than $1 billion?
Oh, to buy more nuclear bombs. Come on.
Quantity takeoff is one aspect of pre-construction. It is not pre-construction, though.
That's right. But, you know, people are doing all kinds of things with marketing that may not be aligning exactly with what they actually do. And whether or not they do it well is also remains to be seen.
We are back, and we have the full crew. It's been a while since the full crew has been here, and it's good to see you all. And you're looking all very fresh and good after a small festive break. So let's dive into this. Today's episode. As I was researching and doing some research for this episode, there are a few articles which came up which seem to have set the trend or the theme of what might be happening in the construction industry in 2026. So I thought that we could do an episode on what the 2026 construction industry trends might be. So we'll dive into a few of the points there and get each of your opinions on the points that have come up. Secondly, we will have Steve from ConCntric coming in. They raised a $10 million Series A to unify data, workflows, and people in pre-construction. And I also found out whilst researching, he was 26 years, he was the director of pre-con at Clark Construction. So super cool background for a tech startup founder. Next, there has been, I don't know if you've seen it in the news, but the CES conference in the US, it is the Consumer Electronics Show, I think is the actual term. And there's been some ridiculous product announcements there, which I have a list of 10, which you can go into. And then finally, there's a slightly unusual acquisition in a space that, Patric, I remember we did the first podcast we ever done with you back in, I think this must have been 2024 now.
February.
There was a certain area of the world which you thought was, I don't want to twist your words. But
overfunded?
Somewhere you wouldn't put your money.
Aha, okay. Yeah, I'm glad to revisit.
So we will revisit that.
What was that?
Well, tune in. Wait till the end and you'll find out. So, shall we dive in?
Sure.
So,
yeah.
Let's do this. Okay, so first few trends of 2026. So each of the points here have came from an article that has happened like in the first week of 2026 as the trigger, which kind of set the trend and the sentiment towards what's going on within the industry right now. So firstly, in the last week or so, there was a report released or data released by the US Census Bureau and the Associated Builders and Contractors, which is ABC. And what they have outlined are the types of projects. So for example, data centers, manufacturing facilities, public infrastructure, etc. And whether the trend is going up, down, or stagnating. So here is what they come up with. And some of it will not be a surprise to you, but anyway, it's good to just see what's going to be happening this year. So data centers, trend direction, high growth. No surprises to anyone there?
Is that even insightful?
Nope.
What does that mean?
Yeah. Yeah, I mean, that means that the trend is on the same direction as it used to be. Is it good or bad? And what's the net result from that? We shall see.
Yeah, and we can get into that. Manufacturing facilities, high plateau.
What does that mean?
That means that
I like Patrick to look at that.
The trend was going up for a long time and at a fast accelerated pace, then suddenly like flatlined.
Horizontal.
Okay. Like a mesa in Arizona. Okay.
Mm-hmm. And apparently a cause of this is because of labor shortages in specialized MEP trades.
Mm-hmm.
Public
Or expensive
infrastructure.
financing.
Public infrastructure projects rising trend, which I think has been across the news pretty much.
More spending.
Yeah, traditional office projects declining, which I mean will not be a surprise to anyone.
No, that's okay. So, I mean, I don't know what they compare with. If they compare with 2020, yes, got declined. If they compare, for example, in the Western markets that I cover the most, actually compared to last year, it's picking up.
Mm-hmm.
But not
from
like
from a
50-story
trough.
towers.
No,
I think not 50-story. Yeah. More
exactly,
boutique,
Martin.
smaller.
Exactly. Yeah, and look, I mean, if I take last year as a baseline, then of course I'm taking the trough. But compared to that, it's actually slightly picking up. So that would surprise me. But perhaps they're taking a different, I don't know, baseline.
I mentioned to you guys when I was in Dubai December, the game of the name of the game in Dubai right now is offices. There used to be apartments for the last 4 years. Now it is offices, and Class A offices, which you have 20 or 15-story tower, small offices inside, swimming pool, plunge pool, everything you need, so you can just come to the office and
Do your
get
calls
out
from the plunge
at
pool?
night.
Hey, I'm just having a
I
nice
guess so,
bath, man. What's up? Better than the traditional sauna meetings that go on in this weird world of technology.
It's usually not sauna. It's usually some hot tub parties that happen in and around Dustin's neighborhood in San Francisco.
Some weird things go down at those hot tub parties.
You've been to a few?
I cannot. I plead the fifth.
Guys, it seems like you've been talking about something I was not invited for.
Yep.
Oh God, I won't say anything.
Okay.
I'll share one story. I remember one time, and I just moved to the city. Like maybe we have like 7 employees, and I was actually living in the marina, and I'm walking around, and I really don't know much. And somehow, this girl meet this girl at this bar. And she's like, "You're coming with me to this party." And I walk into this party, and this is on Marina Boulevard. It's a huge house. The house is probably worth $25 million. I'm like, where am I right now? And the whole house was filled, like it was like a giant bed everywhere. And it was like a cuddle puddle party. I'm like, oh dear Lord.
And what happens next?
I didn't stay very long, but it was a experience.
Where's the meetup link?
I'm not in those WhatsApp groups. Not. I wish I was. But I'm not.
As you now know, Martin, you don't have to RSVP.
No,
you can just walk in.
No. You need to hang out with the right people by the bar.
Yeah, I wasn't dressed appropriately. Everyone had PJs on. I just felt very out of place.
Oh. Well, tech capital of the world.
Yeah.
That was when money was really free, though. So I don't know. They probably aren't renting out the $25 million mansions these days.
Now times are tightening. The podcasts are tightening. Things are becoming serious. Okay, back to this this chart then. I think we got traditional offices declining, multifamily condos collapsing. That's interesting. Shift to purpose-built rental. So there's a shift to purpose-built rental, and pre-construction sales model broken. Wow, Dustin.
What does that mean?
Oh. I think we need to go a bit deeper on that.
I have a trend that's really bothering me.
Okay, one last thing, Dustin. Let me just say this last one, and then you carry on. The last one on the list: multifamily rental stable. Blah blah blah. That was it. Okay, your story.
No, there is a trend, and this happened. I'll say someone posted something in calendar year 2026. I don't want to give away who this person is. But there is a trend of people posting and saying what everyone should do or the future of this and everything. But they like to talk one way and then their actions are completely contrarian to what they just prescribe in how they're trying to articulate their methodology or their strategy. I just think it's funny because this individual had specifically wrote me almost a complete opposite of what he then posts on LinkedIn and says, this is what everyone should be doing. And this is the future of pre-con.
That's the beauty of LinkedIn.
I love it when people publicly act one way and then privately acting like a complete jerk the other way.
Well, this maybe opens up a different discussion on and along the theme of 2026 trends, but I think the social feed on particular platforms, i.e. LinkedIn, is a little bit broken and just gone completely backwards. And I see really little value in my particular feed on LinkedIn. And I think that success in 2026 from this platform, particularly on LinkedIn, actually comes from posting more social content. So funny stuff, controversial takes, and less educational and less insightful stuff. Maybe that can be used as part of your strategy, but I think if your goal is growth, then you need to be posting controversial and funny and memes.
Well, there's too much educational content can be just AI generated. If you just keep feeding it information, it can keep churning out a new piece of content every day. And it's hard for them to come up. I'm sure there's AI tools that come up with funny little clicks, but you really got to be creative.
What do you think, Patric, as an avid LinkedIn user? Who I'm one of the many people that actually post very good content on LinkedIn.
Oh, thank you very much. I have been very silent the last quarter. I didn't quite meet my own ambition, but as you all know, we've been also very busy. I've been very busy. So I have to say, if there was the equivalent of what my iPhone tells me in terms of my daily or weekly screen time to LinkedIn would tell me my daily or weekly LinkedIn time, it actually would probably show like minus 80% compared to the quarter before. So I have to say a lot of the things that happened on LinkedIn in the last quarter, I think I didn't get to see them and not the trends as much. However, then every now and then in our little WhatsApp groups that we're all participating in, someone sends a post and I'm like, wow, that is some crazy dumb shit. People, what was it before Christmas, Martin, that you had kind of, there was someone basically,
German.
No. There was someone throwing some secondary sex organs into the camera and posturing on LinkedIn where you're, okay, am I now on OnlyFans or whatever? So that was really a personal shocking highlight because that is not in my feed, Martin. That is only in your feed. That is not in my feed.
So, because I always make appropriate comments to those.
Yeah, exactly. You definitely curated your feed correctly. But so that's shocking, right? when that shows up. So overall, I have to say I have to get back into the game. Definitely quite interested. I will speak a lot this year about my learnings from robotics last year and why we're excited about that market, industrial automation, construction of factories, the expansion of basically the project economy part of robotics. So that's something that I intend to share a lot of my discussions and viewpoints on. And then secondly, many of you I think know this, but for the last 5 years since our original investment in Speckle and then with Rayon and then Schub invested in Snaptrude, we have CalcTree, which we're also hopeful for. I'm really excited about what's happening this year in the 3D, 2D geometry design, data infrastructure, and AI enablement. And so on that front, I'm always a sucker for great content. And I'm also someone that hopefully this year will put out a few good pieces.
Yeah, I think also on this content kind of production and these big articles or entries on LinkedIn is show me the incentive, I will show you the outcome. I think that's the saying. if someone's business model is to produce content or be controversial, how good quality content they can produce? They will just pick some stuff from here, from there, and it's not going to be anything from the industry, from the insiders kind of industry, right? So, yeah. And unfortunately, my feed is pretty much filled with here is how this changes that.
Everything.
Yeah.
Can I briefly run with that, Martin? I'm gonna build on that, but I'm also taking it in a slightly different direction. So up until very recently, the gold standard of venture was subscriptions, recurring revenue, rock solid, customer acquisition cost, marginally zero for the next subscribed dollar if they renew, blah 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 blah. So that was the gold standard in venture. Well, that subscription model had existed before and was made obsolete. Newspapers. So why was actually subscriptions in newspapers made obsolete? Well, because someone came up with a transactional model, through social plus mobile, etc., and the new generations being trained on that actually now we have Mr. Beast and, whatever, Andrew Tate, and OnlyFans,
Why
whatever,
him?
right? And
Why
so
him?
because he's
you can have a subscription. You can have a subscription on OnlyFans.
Good to know. Now I know that. Very good. So, but my point is, right, so there was the gold standard model that was already established in this industry, and it was made obsolete by a different, more transactional kind of a model. And unfortunately, I think many of us wish we would actually go back to newspaper days, to real journalism. And then, it's hard to say as a single user, well, I would subscribe, because that in itself doesn't pay the journalist salary that actually is investigative and does a good job. But if it were, let's say, 10% of society that on top of the current subscription base would go back, then all of a sudden you would also see quality journalism to a higher degree. But that's unfortunately not what technology has enabled. And perhaps, Martin, that's also, and now I'm tying that back, why AI is actually also threatening some of the old school legacy software subscription models, not only because it rebuilds software, but also because it makes software now consumable, software creation, consumable in a tokenized way.
What's the last sentence?
So it makes software deployment and creation consumable in a tokenized way, in a fragmented way, because that's what content and social media plus mobile has done to the subscription business of newspapers. I was not able to actually consume that in a tokenized way.
Okay,
I think, Patric, it's interesting because society, we have this pattern of overcorrecting on everything seems to operate with like a sinusoidal function, where we started with subscription and then we went away from that, and everything has its own frequency and our harmonics to it. But just as we're seeing actually third parties that are news media outlets that are trying to build subscriptions now. So you have these third parties where you actually subscribe to their channel in order to get their full content. So they give pieces of it away for free. So I think people are very reactionary these days. And one of the things that grinds my gears more than anything is I see a lot of tech companies that existed before AI, and now they brand themselves as, we're an AI native solution. What the F does that mean?
That's
you're also cloud and intranet. Yeah.
Yes. If you change your position based upon like how the public perception of things, then you're losing the truthness of what you're trying to be and the problems you're trying
Dustin,
to solve.
do I have permission that I briefly share a short snippet of a conversation you and I had on Saturday?
Yeah.
So you and I had this conversation. You and I discussed a little bit product marketing versus brand marketing. And one of the things that you told me and resonated strongly with me is how many companies, can be a startup, can be a scale up, or it can even be a traditional business, actually completely suck at communicating towards a narrow ICP, a narrow persona of a buyer even, with product arguments. Here's the problem that we're solving for you. This is what we're doing. You don't have to speak the language of a VC. Sorry, you don't. You don't have to speak the language of a newspaper or of a mega trend. Who the fuck cares? The person that gives you money, and the cheapest money, is your customer when they wire you cash for getting a problem solved. So better speak their language. And that's what should be on your website. Do you really think they care about whether you're AI enabled or not? I've never seen someone look for a solution. Hey, please show me now the AI enabled version of that.
Yeah. And now that I said that, when you start looking at all these tech companies, you're like, wait a second, this is actually for VCs, not for customers.
Exactly my point. Exactly.
But that just means that there's too much easy money still, because these probably businesses wouldn't stand a chance of survival just miscommunicating constantly. Like I've mentioned this many times. Some of the website, I've been in the industry my whole life, but some of the websites, I just don't understand what these people do.
Yeah.
And you need to be really either specialist in just this to know, but I just don't know.
And look, Martin,
well, I mean, this exists at very large scale. Try to go to Autodesk's website and figure out what their products do.
Oh God,
like
a number of the companies like that.
Look,
but these guys don't have to.
To your point about being very, very liquid, Martin. I mean, I'm certainly not the only one, but also speaking to my conviction here. Starting a business and building a company was never easier. Never easier. The cost of infrastructure have continuously come down the last 20 to 25 years, right? So, I mean, when you try to build something like PayPal in the day, dude, you had to build your own database infrastructure. Like there was no database open source provider that you could actually just tap into. So then 5 years later, you had a ton of database options, including MongoDB, that you could tap into. Then cloud came, right? So now I could actually deploy on a cheaper cloud infrastructure. Now we're in the age of vibe coding, right? So it was never easier to start a business, but it was also never more difficult to build a great business. I'm absolutely convinced of it. And that both things go hand in hand. The more people can create businesses, the less, not only the less share of companies will actually become great, but it's also genuinely becoming more concentrated in a few companies that are truly, truly transformative. And so that's, both things they seem diametrically opposite, but they actually reinforce each other.
Yeah, I wasn't going to go in this direction, but as you mentioned it, Patric, I would also follow up on here. So as I age, either I'm getting old or I'm just starting to notice the trends here. But as times go on, we see this across many industries: music, film, sports, now company building, content, that the more that comes into the market, the less quality that is available in each of these. And the more the reason people do this is because it's money oriented. So where does that leave things like true creation, like true art, and like actually building, like you say, Patric, high quality and good companies? Does it make it harder, or does it or is it just kind of like a mix of a massive storm that just on goes, and there's other factors that are associated with success or creating good films, good music, good content, good companies, and so on?
Very interesting question.
Maybe a bit philosophical.
I think that if we look at technology and what it does with what we do day to day, there is a layer at some point that everyone can catch up with. For example, structural design, what I do. At some point, I'm 100% sure it will be so easy to just drop a building architectural model into the software, and that it spits out most of the structural components in a very intelligent way. So, and at some point, this will be a base layer for certain type of projects. Yeah, if it's multifamily or like or single family homes, and that will be a base layer. Everything more difficult, that will be for this more advanced, I don't know, engineers or more craftsman type of activities. I think so. I think the further we go on the technology side, this barrier to entry is much easier. It's much easier to enter the industry, but then to be truly great, it takes just more.
I love where it's going. Here's why. I'm sure each one of you have had someone come up, because we're all affiliated with technology in some way, come up to you over time and say, I have this amazing idea. Oh, if I just knew how to code, I could go ahead and build this $1 billion company. I think there is a perception that it is and this is a perception shared by anyone who's never tried to build something, that all it is the idea. And it is, and I've talked about it many times, it's 90% the idea. It is 99%. I actually go to 99%, not the idea. The idea matters. It's the people. I mean, Patric, you and I have talked about investment strategies. Ideas are prevalent. They're all over. They're just, it's like they're virtual particles in a quantum field. They appear and disappear all the time. And it's the people that can realize those virtual particles, harness them, that, you know, you are the people. So now, hey, here, the excuses are out the window. Go vibe code your thing, get a prototype, then you're going to have to rebuild it. And then you're going to have to see if you can stand up a company, if you can get people to come work for you because you can inspire them, if you can get people to invest in you because you're investable, and see if you can actually create something. But I actually love it because it will demystify that it is actually the people involved that separate the pretenders from the contenders.
That's a great short, though, and save it.
Yeah, right. See you next week, guys. All right, let's go. Should we go back to the construction industry trend? So we've done one.
I have one more very quick one, Owen, that I might.
Go.
Sorry, I didn't plan this. So today I spoke with a longtime friend, has been investing for a very long time, super successful, blah blah. He tells me about this. Sorry, I'm not going to give the name, but this group of people, 6 friends that actually made as a syndicate 500 million on their own. Investing in crypto startups. This was 2017. And so since 2020, they had then started their own venture firm, basically taking the crypto startup tech investment successes into the wider venture landscape. And he said to me, Patric, these people are completely frustrated how slow tech venture actually develops. They think the companies don't operate as quickly enough. Well, why? Because they come from the crypto world where you could literally just day trade. You could see a lot of community mobilization very, very quickly. And so that's funny in that context, right? So what an entrepreneur that goes out today perceives is, hey, I can build a company extremely quickly. And then there's this group of people that made a ton of money investing into tech, and they're like, oh, it's still very, very slow. So really interesting kind of context matters.
Can I tell one story about crypto to AI?
We got to start charging you to tell your stories now.
Because, all right. So in Silicon Valley, there were the hardcore crypto people. And then when a market explodes, you get the, Gurley at Benchmark was talking about it. You get these like leeches that attack that market and go after it and like then try to like monetize it. So that's why I was like not hang out with the crypto, because most of them were like douchebags and awful people. And so, but I knew a bunch of them. And so I get invited to this AI event. It's at the Battery in SF. If any people know the Battery, it's a members only club. It's kind of high end. And I walk into this thing. I look around the room. I'm like, oh my God, every crypto douchebag is now on the AI bandwagon. I'm like, okay, nice. We've reached a really high point. And they follow this money trail and they look for they're just looking for a quick win. And yeah, you can make a bunch of money when you're getting valuated on absolutely nothing, but you actually created no value because you have no users.
I think this is called something like jumping on the bandwagon, which will segue very nicely into a next point of what a trend might be in the construction industry in 2026. So obviously everyone that listens to this podcast and all of us know about the large deal that happened at the back end of last year where Acom bought ConCntric. Do you think that we will see more of such a deal in the following, doesn't necessarily have to be the following year, but coming up?
So are you asking us for hot takes? Is that what you're asking?
Well, yeah, I had, maybe there is some more of this bubbling in the industry.
I think we'll see. Okay, I'm going to give a hot take. Whoever post-produces the video, please do not leave out this following sentence. I'm giving a hot take now with a, cheeky...
You're live, by the way, Patric.
Side note, I think we're going to see $3 billion exits in construction tech in 2026.
What? Boom, boom, boom.
$3 billion.
$3 billion.
Okay. Which continent? Which continent?
We're all on planet Earth, brother.
So, okay.
Don't
I
get
know
too
of
specific,
two.
Martin.
So you will see one. I'm sure you will see one. 3 billion.
Thanks for crossing fingers. Thank you.
Yes. Yeah.
Okay. And what about on this trend of big AE software, AE consultant buying software companies?
I was really trying to get around that.
I think you're going to see it.
Okay,
I
mine,
think
Dustin.
you're going to see it, and I'll tell you why. I've been contacted from people on the sales teams of both Procore and Autodesk, and they're realizing that some of these tech startups are slowing down their sales cycle and going to impede their continued dominance. They'll use their balance sheet to start padding their product portfolio, which they should. That's smart business. And so I do see that happen.
And
Like
what's the reason for them slowing the sales cycle?
In the last 2 weeks, probably 5 salespeople, 3 from one, 2 from another, have contacted me about different types of products in the market causing them pain. And that's when big companies will start reacting.
Why would they be slowing the sales cycle?
Because there's a lot of companies out there that are going after niches, and Autodesk and Procore are very good at going after large horizontal markets. But then when the AEs have to talk to specific needs, they generally are not very good at it. So when you have a hyper-focused company going to fill a very specific void with a subset of that horizontal, it's hard to compete.
Yeah. So my theory is that there will be a lot of small companies throughout 26 and 27, small companies which can do a lot of revenue or can automate a lot of revenue. And in design for sure, I'm pretty sure elsewhere as well.
I have a challenge for our listeners. That we will provide a substantial reward to someone who can vibe code a company in January 2026 and have it acquired by December 2026 by one of these companies.
What's it substantial? What's the definition
Vibe
of
code
substantial?
only.
Vibe code
Vibe code only. Vibe code only. Okay. Oh man, I didn't know you were going to say that. I'm loving it.
Let's do it. Okay, so, more trends. Okay, continue trade friction with tariffs. And the trigger of this point was the fact that January 5th, 2026, US formalized plans for new tariffs on more Chinese semiconductor imports, scheduled for implementation in 2027. And there's also this trend of supply chain localization. And yeah, that's that.
Dustin is quite quiet right now with tariffs, I think. No one is mentioning tariffs anymore.
Well, tariffs seemed like a small deal when you take over a country.
Yeah. Yeah. So there's no more tariffs talks, or
I think it's ongoing, but my point is that the trend is like the industry is still seeing the fallout of these, and there's uncertainty when people are putting bids into projects because they're unsure of how much material will cost by the time they put their bid in, or by the time they order it from when they put their bid in, which causes friction putting together contracts and other problems. So,
what's interesting, because I don't know if tariffs are actually like, I don't think people are forecasting tariffs are going to go up substantially. So I feel like whatever. Like if anything, the tariffs might get cut at this point. So like it's actually protection. It's actually like you got a put option.
Yeah, I mean, people accelerated a lot of procurement in, I think, mid last year, before a lot of the tariffs really became effective, and built some stock, etc. That is now not possible across a number of categories anymore. So I think that's sort of the, if you want, delayed effect of the additional costs there, that we're seeing across a number of categories. But you're right. I mean, if categories go away anymore, then you're also debottlenecking that procurement very, very quickly. So it's hard to predict. It's really hard to predict it's hard to invest also in that framework. It's hard to park money in markets that are dependent on sort of unplannable regulations.
Trend.
I don't know.
I go, Martin. You go.
I don't know how to tie it, but with the trends and construction especially, but there was this shift in Japan. Well, for some time, the yield, I think I had it somewhere. It has spiked on the government bonds to like 3.5%, which it was like for 20 something years, around zero. Okay.
Yeah, about 30 years.
And
exactly.
yes, and then my question in general is because I was trying to figure this out, and I'm not sure how this impacts the world, the Western world, because people were borrowing a lot of money in Japan and then taking this money out and spending in other places because it was cheap there. So if the yield in Japan is now becoming 3.5% and perhaps even more, then what is going to happen with the capital which was in the US, UK, Europe? Is it not going to go back to Japan for the guaranteed yield? And then what will happen with these trillions of dollars which were invested or are invested in the Western world? So that's something interesting.
I can. So what you're describing, Martin, has already played out since January 2025, actually. And what you're referring to is the yen carry trade. So that is indeed exactly what happened. So if you look at several of hedge funds, asset-backed finance businesses, for example, the almost entirety of the aviation leasing industry was in some form financed by yen money through the yen carry trade. Not 200%, but most of them actually had some level of yen money. Hedge funds had a lot of yen money. I mean, just go through the room, and it'll be hard for any platform that had more than 10 billion not to have yen money in there. So that is already unwinding since the mid 2024, and then accelerated last year. And secondly, Japan is, correct me if I'm wrong, I think it's still the largest holder of US government bonds in the entire world. So is it?
You're forgetting No, you're forgetting the largest holder,
which is China.
No.
Which one is it?
The United States. It's the United States itself.
Okay, fair enough.
Yeah.
So buying back, etc. Okay, foreign holder, I should say. So Japan is the largest foreign holder of US government bonds. And so as that unwinds, because you're not actually capturing the spread abroad, you're now being able to invest in other opportunities at home or in other markets. Actually, Europe has attracted trillions in capital. That's why actually European stocks and equities are soaring since January 2025, in case you didn't get that memo. A lot of money is being parked there. So that's why economic policy is a very, very interdependent and sometimes also fickle structure. And some of the things that you can achieve with some of your policies have secondary effects on others. And that's a big secondary effect of policies that have happened.
Any direct impact on construction or not really? We don't know.
Maybe.
I don't think so. No, I don't think so, because real estate investability in itself, the business cases for real estate investability are more fundamental. And I think in many segments, the rent yields aren't that great that you would start investing. And it's not necessarily becoming, cheaper cost of capital is then not really pushing it across the line currently, because the markets and the demand are more unstable, they're difficult, etc. So the impact on construction is always then there when you sort of have a stable, let's say, construction and rent across asset classes type of an ecosystem. And now if you get cheaper cost of capital, you push it across the return line. But right now, I think we're having more of a fundamental planability issue in many segments in the United States. That cheaper cost of capital by 100 basis points or more are not going to change the business case for many investors.
Nice. Okay, let's move on. So we got to I think we've done 3 so far. Number 4, increase in offsite manufacturing. I mean, it's kind of obvious, but the trigger for the news that Holcim had acquired a manufacturer of precast material called Alkern, and also Swinnerton, a large general contractor in US, topping out a facility for cross-laminated timber. So large timber factory. And for a little bit of context, it's a facility capable of producing 7 to 9 million square feet of CLT annually, with Swinnerton effectively removing the biggest risk in mass timber construction, which is supply chain reliability. And yes.
Where is it based?
Pacific Northwest.
Seahawks, baby. Sorry, I had to plug that.
Seattle, yeah. So that to the construction trend, I think this is an ongoing thing, and there was some interesting startups that were starting to pop out towards the last half of last year, who are facilitating transactions between the contractors building these sites and people manufacturing offsite manufacturing, doing offsite, so pre-manufactured materials.
I mean, I don't know what you guys think, but I think slowly and surely that trend is unfolding. I personally wouldn't hype it too much, because there's, if you jump from whatever 5% of construction market share to 7% offsite manufactured, that doesn't make it for a hype. And then I'm using random numbers right now. And two, to use a Holcim acquisition in precast as the trigger for, oh, by the way, this is why offsite is really taking off, dude. They are really not big in precast. So I mean, that industry has been around for decades. So I find that a little bit of a funny trigger by that journalist.
Okay.
I mean, all precast is offsite manufactured, or most precast is offsite manufactured, or
yes.
Yeah, I guess you can cast them in place or cast them on site, but
very project specific, and you can't really. No.
Okay. How about? Okay, I'll jump forward to another one because it's also hot news in the industry right now, which is physical AI and robotics. So we mentioned this a few times on the back end of Bricks and Bytes last year, and what our predictions would be. But just already this year, there has been an acquisition of a very an infamous robotics company within the construction space, Canvas Robotics, who were acquired by JLG. So JLG are a company who manufacture access equipment. So things like boom lifts, scissor lifts, and various other things. So, and it's kind of strange. Why does a company like that want to acquire a company like Canvas? The information that I could find does not give away too much. All it says is that Canvas, through the acquisition, Canvas's technology will advance robotic end effector capabilities and autonomy, enabling pairing with JLG access equipment to support a range of interior construction applications. So JLG are now moving from like awkward access to a more horizontal kind of suite of offerings, which involve drywall, as Canvas were famous for, or maybe other things. What do you guys think? Patric, I'm interested in your thoughts on this as you look into this space.
So first of all, congratulations to Kevin. I think he found a good new home. He's a fantastic, I think, technical visionary that founded Canvas in 2017. Very, very high-end and high-fidelity market that he picked. Very daring, because if you want to finish drywall, you have to go through so many steps until it's actually up to the specs that typically good projects, especially office buildings, commercial buildings, etc., would need you to do. And that is a very, very difficult automation application. And he started that business already in 2017. This is not a business that was born with 100 million of physical AI VC money 2023. Okay, so he actually grinded through and built this, and the product is working. So congratulations to them. And I think with regard to the JLG acquisition, so I'm surprised by the interior reference that they have been given in that press release, not because Canvas is obviously very applicable and has done a lot of square footage in interior. But what I was thinking initially when I saw the headline was, okay, this could be quite interesting, because if you combine the boom lift with the ability to actually go onto facades, with Canvas's robotics, and the Canvas robot is actually able to steer the boom lift in an automated way. That's a pretty nice segment to go into facade as well. Doesn't sound like that's necessarily the direction that they're advertising, but perhaps that's also on their mind.
How much they acquire them for?
No
Doesn't say,
news.
say.
Strategic acquisition is the terminology that I saw.
Everyone is strategy, I guess. That's how you name them when you do them.
Yeah. So do you think that exit strategy for robotics companies is to be acquired by, like, I don't know, would you refer to a GLG as like an OEM or something?
Yeah,
Depends who you ask.
Yeah, I would refer to them as OEM, and I don't know if they have a distribution arm or something like that, but certainly equipment company.
And as robotics starts to gain more popularity in this space, do you think we will see like the giants emerge, a bit like you'll have like an Autodesk, a Procore, and a few others of the OEMs versus like a particular startup company that exists? So will you get like these OEMs or big companies that start to acquire all of these robotics companies as we know them, and they start to become the giants of the industry?
I mean, I can give it a go, but it's a very loaded question the way you are asking it on, because you can attack this market from very different angles with different solutions, also where in the value chain you sit. So we will see various different types of acquisitions and types of buyers. But I do also think a lot of robotics companies will never find a home because they actually cannot break out of a very monolithic vertical niche. And in that specific vertical niche, you will have a lot of competition. So one of those that I would be interested in seeing how it further plays out is actually the painting robots, because that was one of the more fungible and already with a lot of like vendor competition type segments. I'm not sure that all of them will actually find a home.
Okay, the last 4 minutes we have Steve coming. So just before he comes, the last 2 was more leniency on so-called green building mandates, and the trigger for the news was that New York had a all-electric building law coming into play. So the aim was to ban gas in new construction from 2026, which, shock horror, has been delayed due to a pushback from the builders putting these in and grid reliability concerns. I think a number of similar things in the UK as well, and I even think maybe a few years ago it was like decarbonize. What was it? 2030 net zero UK, whatever it was. And obviously, there's other priorities that exist within the globe right now, particularly in defense, other construction and infrastructure projects that are going on, data centers and so on. So, what are your guys' thoughts on this? Dustin, you go.
I'm not sure how to respond. I'll pass to Martin.
I think that Europe is a clearly energy problem, has an energy problem, and will have energy problem. So that's why all of this decreased or more stringent EU values and all will be implemented, but not at the pace that they used to be. And until in Europe we figure out how can we get cheaper energy without and not relying on someone like completely, I think this trend will slow. I'm not sure about US, but in the US I'm thinking that you guys have so much of the energy infrastructure, data center infrastructure expenditure, which this will also be taking more and more energy. So perhaps the reason to slow down with this project is to allow for more energy capacity for the data centers and all of that. That's my best guess really on the US.
Yeah, and on New York, yeah, I think since the 2nd of January, the New York mayor has a new agenda now. It's We need to make sure that Walmart doesn't distribute the groceries in the city anymore, but the city of New York now does that. And I'm sure a lot of cheaper, more accessible apartments, living options, they will play nicely in that agenda too. And so,
yes,
more expensive materials and regulation are certainly not gonna fit into that mayor's agenda.
Looking forward to purchasing mine.
I'm sorry.
I'm silently hoping it will be so bad that in the next few years there will be nice opportunities there.
I don't see the path to success
apartments.
I am sorry, but New York, how do you elect such an idiot? Like, my God.
Hey, I think we worked out how to wake Dustin up for expecting advice.
What the hell are people thinking? The dude's talking about, oh, well, the World Cup tickets are too expensive. We want to help make it so every New Yorker can go there. What?
Every New Yorker.
Yeah.
What are we talking about? Like, what? And he said, like, I listened to his inauguration speech. He said that he's talking about big government. Government's going to try to help you. At some point, the government can't be bigger at solving all the problems than society is at solving all the problems, because the society funds the government. The government, therefore, can't get, it has a cap limit on how big it can get in order to support society. Like, it doesn't work the other way around, where government can be massive.
I like that.
And for anyone who thinks that a socialistic society is ever viable, you're an idiot.
Go back to communism and check.
It does not work, because that implies that a government can determine your right to produce or work on something. And in a socialist society, they're going to pick and choose who is the janitor. And tell you what, I'm never going to be a janitor.
You don't know yet.
No, it's an absurd position on how things should operate. We should have the freedom to work on what we want to work on. And if people deem it valuable, great. You know, I'm not all about money. I've been fortunate in my career to make some, but like, I know people who don't make a lot of money. Do things that make you happy. And if you're content in life because you have family and you are rewarded, great. But like, it doesn't take that much money to live well. And like, don't operate from a position of jealousy. This rhetoric going on is, well, let's penalize other people because they've worked really hard for something and take it away. Look, there is all kinds of things I think we should change in the tax code. And it's not raising personal income. If you want to tax carried interest, I actually think, sorry, Patrick, I think carried interest, well, you're not in the US. I think carried interest should be taxed like personal income. It's kind of crazy. You're borrowing someone else's money. You get this windfall and you get long-term capital gains. That's stupid. 1031 exchanges. Sure, tax the shit out of that. But like, you guys don't even target those things. So it's like all hypocritical. But this rhetoric of, well, let rich pay their fair share. Why don't you write down a number and let's agree on what a fair share number is. And then let's compare against what it already is. And I guarantee we're already there.
Now, the one, I know we have someone coming on, but the one thing I will say, Dustin, also to build on what you're saying, sorry, why does an individual, and I'm going to pick a ridiculously high number, why does any individual on this planet, part of the society and part of mankind, need more than $1 billion?
Oh, to buy more nuclear bombs. Come on.
Right? So,
hey, Steve said, guys.
You use the word need. I don't think anyone needs it.
That's right.
Hey, Steve.
So,
hey, Steve.
Hello, Steve.
Hey, guys. How's it going?
Yeah, good.
Nice to meet you all. Dustin, good to see you. Been a while.
You as well.
Hey, Steve.
What's shaking?
Yeah, what's good? So you, founder of ConCntric, also industry legend, raised was it 10? Oh, sorry, I just don't have the figure right in front of me now, but your Series A, $10 million Series A, the back end towards Q4 last year. So tell us a little bit about ConCntric. What have you guys got in the works? What's the product do, etc.? And how are you going to be allocating this capital?
Well, sure, I can't share all the secrets, Owen, but
come on.
No, all good. No, ConCntric's an AI first pre-construction platform. my background coming from the industry after 26 years of living and breathing all of the challenges the industry faces, they're numerous, and pre-construction overall involves a lot of stakeholders, and all of them have a lot to do with the success of the project. So we're there to help bring everybody together in a collaborative environment, leveraging data and pulling together all the various workflows, most of which we're building, some of which we don't need to, because guys like Dustin are building great estimating solutions like Edify. And so we can just marry those up and provide a holistic, complete experience for the project, the stakeholders, and our customers.
Mm-hmm.
So that's your soundbite, Owen.
Very good. Does anyone want to follow up with a question to Steve?
I would love to, Steve, maybe from your master, what does a product do? What do I get if I'm a customer? Let's say I'm a GC.
Well, and what you get is you can throw out all of the various ad hoc spreadsheets and the very few actual point solutions, and you can have one common environment to come in and do your pre-construction work and have what you do today inform tomorrow, forever in the future, by having structured data and fully contextualized data at your fingertips. So we could be on here for probably 2 hours if we wanted to talk through all the different elements of pre-con, because I think it's extensive. And we're not trying to solve all of it, but strategically, the vast majority of it, does need to be solved. And, we're proud to be the one kind of leading the charge to help pull all this together.
What I like about your, just in preparing, what I liked about your website, Steve, so first of all, I like how you're actually speaking about the features. It seems that we had a discussion earlier, actually, you're speaking to your customers rather than any other group of generic visitors to your website. And that's how it ought to be. And you're actually quite explicit about the features. And one feature that caught my eye, which I had never seen anyone pitch me, for example, is you're calling it Idea Library. Talk to us about what's the Idea Library that I get when I use ConCntric.
I mean, that's one example. But if you just think about the power of what we're doing in pre-construction, you put a lot of effort into one project, whether that's generating ideas on how to enhance the design or course correct. If you're in the unfortunate position to have to value engineer, which is a dirty word in our industry, but there's a lot of creative ideas and knowledge that the subject matter experts generate, but they're logging them into Excel. And when they're kind of done with the job, they're just kind of sitting over there on the shelf and not adding value to anybody. So across our platform, all the things that you do, whether it's design ideas and risk or anything, all those great ideas and knowledge is being gathered and highly structured within our platform for use by a different project team tomorrow, 3 years down the road, whatever, because there's an incredible amount of knowledge. I mean, the industry and pre-con itself is not the problem. We have great professionals that are doing amazing things with the right processes. They just don't really have the advantage of data and more advanced tools to help them do it far more effectively and efficiently. So anything that we can do over time to be, gathering all that on the behalf of our customers to allow the broader, team and people going forward to have access to it and learn from it and recycle and utilize ideas or notions of risk, or you name it, any form of metric. You can do all that in ConCntric.
And sorry, just to quickly follow up on that, because I was just making sure I got the term idea in this context right. And I was looking at, you have a few software screens on here, and so one of the software screens actually shows like a mini demo of what adding new ideas within ConCntric could look like. And so, for example, remove decorative stone walls in the garden, or add 36-degree caliber trees, remove kids' pool. Like, these are the kinds of ideas, as a generic example, that people would, for example, do. And I'm assuming there are other ideas that your customers are using there too.
Yeah, I mean, those are going to be generated as somebody's thinking about how to optimize the design for a given ROI, or, if they, again, have to value engineer and they're just in that context. It's a very, very small, discrete example of some of the optionality that needs to be explored. It needs to be priced. People need to visually understand its impact, and you need to get decisions. And so it's an incredibly wasteful and inherently inefficient process that, we're making a heck of a lot better and more cost effective. But, that's just one of the tools in our multi-solution platform.
Hey, Steve. So I've gotten to know most of the founders that have come from construction to start tech companies. What's the biggest leaving construction? Because obviously you had a lot more success in construction than I did. But what was the biggest shocker of trying to build a tech company versus you running, a couple $1 billion of construction?
Can I add something
surprising
to
or
that,
shocking?
sorry, quickly? I would hedge a very strong bet right now that no founder in construction technology has 26 years of experience in a large general contractor.
That
Such as Clark.
makes me both old and crazy, I guess, huh, guys?
Well,
I do have conviction. There's no shortage of conviction. Yeah, Dustin, to your question, what's different? What's the same?
What's the most surprising thing? What's harder? What's easier than you thought? Like, what you went in with a perception. What's changed?
There's a lot of similarities, which, has always given me great comfort from the start. And, really the similarity starts with team. If you can build an amazing team and cover all the right bases with the right expertise, there's no shortage of what you can accomplish. And we've done that. So we got a fantastic team. No different than the teams I would assemble to go plan or build a project and, drive it to success. So, after 26 years, building a business, growing a business, at scale, moving fast. I think one of the advantages coming out of construction is there's very few industries where you are conditioned project after project to deliver on a cost certain, date certain with massive ramifications. So I think it makes us incredibly disciplined and capital efficient because you have to be in construction, and that's carried over into our company. What's different? I tell you that the engagement with customers, particularly from a marketing and sales perspective, is a much different game plan and playbook. When you're, we grew significantly in my prior life through demonstrating and differentiating ourselves compared to the competition with greater service, et cetera. But you're competing against 4 folks to 1 customer, whereas we built an amazing product that we want millions of people to see and buy. And you're kind of it's an inverted process, and
you're theoretically competing with a million other ideas or startups, or just any tech company vying for their time is a competition for your time.
Yeah, there's a good element of that. Pre-con has been grossly underserved compared to the other phases and people involved in the broader construction industry. But all of the above. So it's different. Is it harder? Not necessarily, but it's different. But we're getting pretty good at it.
Martin, do you have one? And then I have one very provocative question I want to ask, and then we will end this segment.
You did.
Supply chain.
Well, the success I achieved when I was back in my building days was really having a project first mentality, not, hey, I'm in it here to just build it and profit at the expense of others. So our whole platform is designed around a project first focus. The lion's share of our customers today are the builder stakeholder of that group, simply because those are the people that are being delegated to administer these workflows and processes and deliver those results on behalf of their client, the owner. But we have more and more owners also coming on board, because as we continue to expand the platform, there's more and more in it that they can use directly for their own purposes, in a similar but slightly different way than the GCs doing their work. And so that's going to continue to expand, and we're going to be building solutions that also help the designer, the architect, the engineers, the consultants do their work more effectively, not the design, 3D drawing work, but the business workflows that they have to go through to be successful. They'll also be able to benefit within our platform. So again, project first, but you got to start somewhere. And we started with the builders and have been expanding from there.
Okay, last one, Steve. So on Bricks and Bytes of recent times, we've had a number of companies come on and claim that pre-construction can be reduced from months and years to a matter of minutes. What's your view on such a claim?
Yeah. Well, I mean, you gotta. Yeah. I don't know if I even have the ability to answer that question. Not because
let me ask you a different
I don't
way
have
for
a
you.
good one, but yeah, go ahead, Dustin.
A different way is when you go through pre-con for 2-3 years, do you spend most of your time doing takeoff?
No.
Thank you.
Put them.
No. There's not one person involved. There's many facets to pre-con, and quantity takeoff is but one aspect.
That's why we get so funny, as we get the quantity takeoff folks, and they said we do everything at pre-con. I'm like, quantity takeoff is one aspect of pre-construction. It is not pre-construction, though.
That's right. That's right. But, people are doing all kinds of things with marketing that may not be aligning exactly with what they actually do. And whether or not they do it well is also remains to be seen.
Oh, we talked about that earlier.
I have a good deal of bias, and that's why I built, I have the Built by Builders network, which is like fellow founders that have spent sufficient time in the industry to really know what they're doing and go out and solve the problems that, they themselves experienced and consider themselves experts in. So I think it's been incredibly hard for outsiders from our industry to come in and develop technology to solve, our needs as builders. And so proud to be a builder, building a platform for fellow builders and doing it the right way.
All right, Steve. Thank you. Great way to end this. Thank you so much for joining us.
Enjoyed
And
it.
good luck with ConCntric. Looking forward to seeing you around.
Appreciate it, guys. Thank you.
Take care, man.
See you now.
Thanks, Steve. Best of luck.
Whoa, very cool. We have to do like the great takeoff debate. Yeah?
The amount of time spent in pre-con and quantity takeoff is insignificant.
Yeah. Okay, we got 10 or so minutes to go. I want to quickly we can cover two more things. One, and this feeds nicely into our earlier discussion about how things are becoming cheaper and how that often results in absolutely ridiculous things being created as a result, like music, films, sports, companies, content, etc. And so CES, as I mentioned earlier, CES was earlier, has been happening, I think, this week or in the last few days. And there is a list that came out of the 10 most ridiculous products. Shall we go through them? Number one.
I'm here for it.
Number one is a Glide Smart Hair Clipper, which is an AI-powered clipper launching in summer 2026. AI-powered clipper, $150. It uses sensors to track speed and angle, retracting the blade if the user moves too fast to prevent a patchy look. Have you
Holy
ever?
And sorry,
had
what is the reaction you want from us? Are we now like, I'm going to buy that, or I'm going to short it? Like, what's the reaction you want?
Yeah. Okay,
I'm
good
going to buy
question.
that.
Okay.
I'm shorting that for sure.
Martin, you buying or shorting? Okay, next one.
Does it?
Sam, sorry?
God, no. I like my barber experience.
Yeah, I would also short this. It wouldn't be for me. Next one would be
More for me.
Samsung. We know what we're going to buy Patrick for Christmas this year. Samsung AI Vision Fridge, a refrigerator that uses Google Gemini AI to recognize food items via internal cameras and auto-generates recipes and shopping lists.
I'm gonna buy.
Short.
Buy? Sure.
Buy.
Martin? Mm-hmm. Well,
This is funny. Keep going.
I accidentally bought one of these as I'm doing.
Accidentally, okay.
Well, yeah, okay, yeah. Well, yeah, maybe it wasn't an accident. The key reason I bought this fridge, I bought a Samsung fridge. I'm currently in the process of finishing off my kitchen refurbishment. I bought this fridge. The key reason we bought it is because it has like a tablet on the front screen, and it's great for like when you've got kids and stuff to fly around, and you can just have it all there in one place. But what I did learn was that it also has AI vision inside of the fridge. So I will feed back to you how this goes. But what I also learned on top of that is apparently Samsung put ads on the tablet that's on the screen on the fridge, which I'm going to be pretty upset by if is the case. So we shall see.
Yeah, but I'm assuming it can auto learn like, hey, you need to order these things. I don't have to do anything. And all of a sudden my fridge is always stocked.
Yeah, stop
Sounds
eating
wonderful.
all that chocolate, you fat fuck.
Sorry, but sorry, that can by definition only work for recipes that only use fridged items. So how is that going to help with all the other ingredients that I don't have in the fridge, right? So
You have to put them in the fridge.
Short it,
But
short it.
I would go to the store and randomly throw things into the fridge and be like, what is the fridge going to come up?
Nice. Bread in the fridge, nuts in the fridge, salt in the fridge, all of it, man.
It would be like a game. It would be like let's just go buy a bunch of random stuff, throw it in the fridge, see what it comes out with.
This is true creativity. We're onto something.
And Owen, don't you want, like, I was thinking about it. I kind of would like if there was like an abusive mode on my language model that was like, stop eating this shit, you fat F.
Yeah.
Like, turn it to a really abusive language model.
Yeah. Or it took like a picture of you while she was eating it and sent to your personal trainer. And this is accountability 101.
Man, when you pitch that on Sand Hill Road, you got 100 million round tomorrow, brother.
Let's go. Okay, next one. OMI wearable chat GPT, a pendant necklace that acts as an always-on AI companion, listening to conversations and offering context. This is a controversial one. Short or buy? I'll go first.
Short.
It's a wearable that's always on and listens to conversations, like takes notes, etc. I do know a few people that use these. Yeah, so mine's gonna buy. Patrick short. Dustin, you a what? Buy?
I think that'll end up becoming illegal.
Oh, really?
I think that'll end up becoming illegal. You can't just be recording every conversation.
Not in Poland, huh?
Okay, next one. Pay toilet lock AI art. I have no idea what that means. It says it's a vendor used generative AI to create a poster of the Rat Pack holding their groins to sell a smart toilet lock system.
Short.
I don't even know what it is. Short, yeah.
I don't know
Sounds
what that
terrible.
means.
AI lollipops. Lollipops that conduct sound through the jawbone to play music while you eat them.
You know, I would not buy it, but this is the kind of shit that sometimes goes viral. So I have no idea what to do with this.
So you'd invest?
No, I would cheer from the sidelines.
And the last one, Durobo, D-U-R-O-B-O, Chrono e-reader. It's a 6.1-inch e-reader marketed on portability to compete with smartphones. So 6.1 inches, how big in comparison to an iPhone? Does anyone know? Come on. Lame.
So what is it? Sorry. So what does that mean? Is
I almost spit my coffee out.
Well, I think it's like an e-reader that's designed to compete with like the size of an iPhone, which is
okay. So it's basically a mobile phone with e-ink display rather than a traditional display. Okay. I mean, long battery life might have a market, but not mass market, I guess.
No, short.
Yeah, I wouldn't.
We do not need more e-readers.
Okay. I want to end this with asking you what's one of the best things that you've bought in recent times, but I don't know if you're all prepared with a good answer. So tell me if you are. If not, I'll skip it and we'll go to the last bit of the show.
I am. Yeah.
Okay, go, Patrick.
I'm not sure if the others are. So
they can think whilst you're explaining yours.
Okay. So I bought last year a robot that cleans part of my exterior of the house. Why are you laughing?
Well, you said it a little bit.
Well, I don't want to be too specific. It's just, but it's a specialized robot that does a specialized thing exceptionally well. That manufacturer, it was absolutely not cheap, but the haptics are perfect. The software is perfect. The app is perfect. The routing is perfect. The durability so far is perfect. It's like you cannot build a better product and make a happier customer in the first year. I hope that continues to be the case, but that manufacturer will get more of my business. And it shows you what's doable in prosumer robotics currently. So that very, very happy with that one. I'm not doing advertising, but I'm just describing what I want.
Dustin, do you have one?
They're on the just actual physical stuff. So I've been getting back into running, and I bought some Martin's gels for any of you that are into exercising, and they're quite fantastic. They're much better than the Goos to just have like if you're on a long run. So I'm really enjoying them. And then I also switched to a Garmin watch versus an iWatch. The battery life is far superior. Like I don't want my watch draining itself on all my other apps, so it's just solely dedicated to my health and fitness, and it lasts a couple weeks.
Nice.
Really enjoy it. Oh, it's a Garmin as well? Yeah. Oh!
Oh. The spy glasses.
I can't believe I didn't say this. I also bought the Meta glasses. They're phenomenal. So take pictures. I usually them. They were charging, so I didn't want to. They wouldn't last the whole time, but they basically replace your earbuds. They're awesome.
Hey, you should record.
Go ahead, Owen.
I was going to say, Dustin, you should record a POV perspective of recording a Bricks Bugs Bytes episode. That would be quite cool for people.
Okay.
Oh my god.
My best purchase was Aran jumper, like an Aran zip neck jumper. I actually think I have it here somewhere. Oh yeah, let me show you. This thing here. So it is like Aran is a type of lamb wool, I think, but it is like so warm you can wear it in any condition. It's like the perfect layer accessory to your closet. So, and it, like, you can wear it anywhere, and like perfect temperature. It adjusts. Yeah, it's warm when it needs to be, but it's cool enough to wear when you're also in warm environments. So, I would. No, the website is. It's just called Aran. If you type in ARAN, then you will find it. Best purchase. Okay. Well, we didn't get on to this interesting acquisition. Do you want to do a 1 minute quick fire on it, Patric, and then we'll wrap up?
I got to run in 30 seconds. Let's save it for
no
next week.
stress. Yeah, let's save it for next week. Okay, guys, this was fun. Thank you so much. Thanks everyone for listening, and we will see you next week.
Don't look down.
Happy New Year.